Hi, I am Anna. I come from www.ntvforex.com. FOMC minutes per profit taking analysis http ntvforex.com news ID 4DCC 548-2020 10:21 AM overview. The FOMC minutes depicted a Federal Reserve that appeared to be not quite ready to take fresh initiatives, whether it is yield curve control or changing the composition or quantities of its bond purchases. This unleashed profit-taking on some of the large moves in equities, the dollar, and gold. The move has carried into today. Most bourses in the Asia-Pacific region were off at least 1%, and Taiwan and Korea markets were off more than 3%. Europe's Dow Jones Stoxx 600 is off around 1.0% near midday in Europe, and the S&P 500 is poised to gap lower at the opening today. Bond markets are on the sidelines, though yields mostly softer. The US benchmark is near 65 BP, having topped out last week a little above 70 BP. The dollar, which has been under pressure, is extending yesterday's gains before steadying in the European morning. The yen and Swiss franc are among the most resilient to the dollar, while the antipodeans and scandies are the weakest. Emerging market currencies are also heavier. Gold held yesterday's lows near $1,925, but the early bounce to $1,962 seemed to spur new sales. September WTI remains within its well-worn range of $41.80–$43. NBSP Asia Pacific. As widely anticipated, China's 1-year and 5-year loan prime rates were unchanged at 3.85% and 4.65%, respectively. Chinese officials seem broadly content with the pace of the recovery and continue to be reluctant to take fresh initiatives. Separately, SWIFT reported the yuan's settlement increased and it accounted for 1.8% of the turnover on its platform, the most since February. NBSP. The US formally ended 3 pacts with Hong Kong over extraditions and tax exemptions. More actions are threatened that could take the form of additional sanctions against individuals and institutions. On a different front, Chinese officials indicated that the postponed review of the Phase 1 trade deal, which US President Trump claimed responsibility for, is expected to be rescheduled soon, though at least 3 top US officials Lighthizer, Navarro, and Kudlow have all indicated it on track, defying most private sector assessments. Taiwan reported a 12.4% year-over-year surge in export orders. It is the most since early 2018. It is the 5th month of rising orders, and there is much demand for semiconductor fabrication equipment. Orders from the US rose 22%. Orders from HK and the mainland rose 16.8% and from Europe 18.2%. Japanese investors had stepped up their foreign bond purchases in recent weeks, but last week took a little profit. On the other hand, Japanese investors continue to sell foreign equities. Last week's 1.8 trillion Japanese yen was the 6th consecutive week of liquidation. Over the run, Japanese investors have sold about 5.1 trillion Japanese yen of foreign equities, nearly offsetting in full the year's purchases up until then 5.5 trillion Japanese yen. The dollar posted an outside-up day against the yen yesterday by first selling off through the previous day's low and then rallying to close above the previous day's high. However, follow-through dollar buying has been minimal and limited to about 106 Japanese yen and 20 sen. A move above 106 Japanese yen and 30 sen would retarget last week's high near 107 Japanese yen, where an option for $1.20 BLN is set to expire today. Support now is seen near 105 Japanese yen and 80 sen. The Australian dollar had a key reversal yesterday, making new highs for the year before selling off and settling below the previous day's low. It made a new low for the week today near $0.7145. Last week's low was near $0.7110, and an option for about $5.65 MLN at $0.7120 may be in play. The PBOC set the dollar's reference rate at 6.9274 Chinese yuan, a little weaker than the bank models suggested, but the greenback rose in the mainland session for the first time this week. NBSP Europe. The US and Europe are on opposite sides of the Iran issue at the UN that may come to a head today. Essentially, the US withdrew from the 2015 agreement and now appears to insist on the triggering of a clause in it that would allow full sanctions to be applied again to Iran. The US may still be able to force its will, as it can threaten to sanction any party that does not respect its moves against Iran. Norway's central bank kept policy steady, which includes a deposit rate of 0. Norway has been able to tap its large sovereign wealth fund instead of issuing much more debt as other countries have done. The thinness of Norway's asset markets, bonds and stocks, removes a large market segment from actively trading the krona, which contributes to its high beta profile. Turkey's central bank meeting outcome is awaited. The CBRT has tightened lending conditions to force up funding costs as a way to stabilize the currency. Prime Minister Erdogan seemed to suggest some surprise move ahead of the weekend. The one-week repo rate 8.25%, which had been its chief operating tool, was suspended last week. NBSP. The dollar held Tri 7.20 yesterday after running into resistance near Tri 7.40. Some observers have suggested the Tri 7.40 is the new cap, but we are suspicious that Turkey does not have the wherewithal to defend it for long. Investors lack confidence in both the substance and process of Turkey's economic and financial policies. The euro set two-year highs on Tuesday near $1.1965, but this did not represent a breakout, and instead, the euro remains in the range that has dominated this month, that is mostly $1.17, $1.19. Today it approached the middle of that range, $1.1810, and the 20-day moving average is closer to $1.1800. It has not closed below the 20-day moving average since July 3. NBSP. On the upside, there are options for 1.4 BLN euros at $1.1840, $1.1850 that will be cut today. Adjusting for the 1.3 BLN euro option, $1.19 that also expires today may have played a role in yesterday's sell-off. Sterling reversed lower yesterday after reaching its best level in 7 months, $1.3265. Yesterday's low, just below $1.31, was extended to $1.3065 today. There are £445 sterling MLN in options struck between $1.3100 and $1.3110 that expire today. Although sterling has risen above these in the European morning, the intraday technicals are stretched, and a pullback in the North American morning should not surprise. NBSP. America. Rarely have the FOMC minutes created such a market reaction. While officials remain concerned about the economy, they do not appear prepared to take new steps as early as next month, that many, including ourselves, thought likely. Yield curve control seems somewhat less likely in the near term, though the staff concern that it could lead to more bond buying that the Fed prepared to do is a bit mysterious. The two central banks BOJ and RBA that have implemented such a strategy have actually bought fewer bonds. Nevertheless, yields did back up, the dollar rallied, and equities fell in response. That said, its call for more efforts by Congress is thus far falling on deaf ears, and not coincidentally, Walmart reported that the drop in supplemental unemployment insurance is already impacting their sales figures. The U.S. reports the August Philadelphia Fed Manufacturing Survey, weekly jobless claims, and the July Leading Economic Indicators Index. The Empire State Survey released at the start of the week was softer than expected, and there may be downside risk to the Philly survey, for which the median forecast in the Bloomberg survey projects a decline to 20.8 from 24.1. Tomorrow, market publishes its preliminary August PMI, and the manufacturing reading is expected to tick higher. Weekly jobless claims surprised on the downside last week, and a further decline toward 920K is expected. NBSP. The lay jumped to a record high in May 3.2% and moderated in June 2.0% is expected to ease to 1% in July. It is not typically a market mover. Canada, Mexico, and Brazil's economic diaries are light. The US dollar reversed higher against the Canadian dollar after falling to 7-month lows yesterday near 1.3135 Canadian dollars. It traded as high as 1.3235 Canadian dollars in late Asia before coming off again. Initial support is seen in the 1.3180 Canadian dollars 1.3200 Canadian dollars area. The risk-off mood today may limit the scope for the Canadian dollar's recovery. The greenback is trading in the upper end of this week's range against the Mexican peso 22 Mexican pesos and 25 centavos, which is also near the 20-day moving average. The next cap for the US dollar is seen near MXN 22.50. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.